Business School, Victor and William Fung Professor in Economics, Associate Director of Hong Kong Institute of Economics and Business Strategy. The panel is comprised of Professor Edward Yao Tang-wah, former Secretary for Commerce and Economic Development of the HKSAR government, Ms. Alpha Lau, Director General of Investment Promotion of Invest Hong Kong, Ms. Nisa Leung, Managing Partner of Aulis Capital, and Mr. Paul Liu, Chief Operating Officer of Lalamove. Let's have a group photo first. Thank you. We will now hand the stage over to Professor Tang. Professor Tang, please.
All right. The title of the session is called Hong Kong as a Launchpad for Companies' Global Expansion. As we know, there are many Chinese enterprises who have been thinking about going out to international markets. Some of them have been quite successful. Some have encountered quite a lot of challenges, and some already decided to exit and come back to the mainland. Today we have a very distinguished distinguished panel with people from very different sectors and background. I'm not going to go through all their bios. You can read them in the booklet. But we basically have every segment of the firms going out supply chains covered here, right? We have Nisa Leung, who is representing the investment side. Alpha Lau, who is now Director General of Invest Hong Kong, helping a lot of Chinese companies going out. Edward Yao needs no introduction, former Secretary of Commerce and Economic Development. After he left the Hong Kong government, he has been traveling around the world, talking to people, and try to tell a better Hong Kong story. And last but not least is Paul Liu, who has been a COO for Lalamove, a company based in Hong Kong, very successfully doing very successful business in the last decade, successfully expanding to over 60 markets. I've talked to them before the panel. I sent a lot of questions to them. Each of them basically encouraged me to make it as interactive, as fun as possible. And we have a hard constraint, which is the lunch talk that starts at 1. So I'm going to start with Alva, who has been helping a lot of Chinese firms going out, seeing this wave of new Chinese macroeconomic development that I think Hong Kong should really try to ride on. On the one hand, taking advantage of new businesses generated from this new outward direct investment, but on the other hand, obviously contributing to China's national economic development. So Alva, based on what you have done at Invest Hong Kong, could you share with us, what are the new opportunities? What kind of firms are going out, and what are these sort of new wave of ODI from China that may be different from the previous 10, 20 years?
I think Chinese companies have been going out way before Invest Hong Kong or the Hong Kong government put together a global task force to do this. But what we have seen, I think, is in earlier stages of going out, we've seen the lower end manufacturing go to Southeast Asia, for example, as China itself becomes a far more technology advanced hub with higher end manufacturing related to technology. So what's happening in the past 10 years or so? I mean, people think of China, they think of EV, right? But it's far more than that. We just had a panel on AI, we had a lot of sustainability related, etc. So the earlier speakers talk about the startups, right? But startups become scale-ups and large companies very quickly these days. And Invest Hong Kong and the Hong Kong government will be actually announcing last year's data next week, so I can't share any data yet. But suffice to say that despite the geopolitics, despite everything, the wave of Chinese companies so-called going out is actually faster and stronger than ever. Long story short, we went through different phases, right? In the past, maybe 30, 40 years ago, US companies went out, so to speak. Now, Chinese companies are strong, and they are going out far more than before. It's not just about sales going out, it's about investing into greenfield, sharing in advanced AI, sustainability, biotech, and other research with other countries, and using China to scale up, at the same time being a very big market. So Hong Kong's role is, we've always been a hub for finance, for trading, and for logistics. So how are we catching the wave and using ourselves as a very useful hub, based on what my colleague Dr. Horace earlier shared about connectivity, capability, stability, rule of law. That's our fundamental platform. Rule of law, English Chinese, common law, low tax, simple. We've been saying this for a long time. We've had this for a long time. But what is our new role now to help so-called Chinese companies high quality going out? Anybody could go out. I could go directly to a country and open the 54 million Chinese companies, all probably going to go out. But how do we, on one hand, help them manage risks, as well as to understand the local culture, local ways of business, and to also connect them with the right players and the destinations that have a demand for these products or services or capabilities. Now, Hong Kong has always had a very strong place for professionals, including banking, accounting, consulting, and legal sector. But with the government now, the new policy is that since September in the policy address last year, we announced the Go Global Task Force headed by Mr. Elgin Yao, the Secretary of Commerce and Economic Development, with all government bureaus, as well as all our overseas offices and TDC offices supporting this initiative. So what we are doing is we're building up our capabilities to actually help Chinese companies using Hong Kong as a platform to then go out in a strategic and more risk-managed way, while at the same time to understand international ways of doing business, without bringing the so-called cutthroat competition way of doing things, also overseas everywhere. But in a nutshell, this is what we're hoping to do in a more broader term.
So what are the common destinations of these Chinese companies? I know this is a very broad question, and you may want to dig deeper into different sectors like real estate, finance, professional services, and manufacturing. I know the Hong Kong government has been talking about we need to build better connection with countries in the global south, in particular in ASEAN, in Middle East, and other places. So based on observations, what are usually the common destinations?
I think Chinese companies are very strong in many different industries, right? I mean, people, when you talk about China now, the first thing that comes to mind is technology. We are strong in technology, right? But there are many types of technology. Green, sustainability and energy, life health sciences, AI. These are the strongest themes which Hong Kong also wants to play a role in terms of our own industrial policies, in terms of the support for the northern metropolis, the parks, subsidies, etc., to build this so Chinese companies could use Hong Kong as an R&D base, as an IP place, intellectual property, as well as to get the necessary certification and test cases or user cases before they go overseas. That immediately comes to mind. But it depends on the market you're looking for. For example, we've seen a bigger wave going to the MENA, the GCC region, the Middle East, right? What do they need? We need to match demand with supply and what we're good at. They need green, they said the oil will run out. We need green energy. We need high-end modern agriculture because we don't have enough food in the desert, in the sand. We need AI to help with our industry development. So this is what has been going to that area. Likewise, for example, to other parts of the global south, you see still a lot of infrastructure development that needs high-speed rail, road building, dam building, etc. That's also going out. So it really depends on where and what they need. And even to more traditional markets such as Europe or North America, there's collaboration opportunities, particularly in biotech, life health sciences, global aging is a problem. So there are always areas that we could look at. We can't just put it all in one basket. So we have to have some kind of research, and that's why we also work very closely with the academia, universities, etc., to see how we could be more strategic in this direction of help.
Great. Talking about biotech, I need to ask a question to Nisa, who just came back from a JP Morgan Health Summit in California. And obviously, she's known, very well known as the managing partner of Qiming, who has been a VC company in China investing a lot in biotech, not just in China, but globally. I was just told that there's still a lot of Chinese biotech companies with operation and even regional headquarters in the US. While we are always concerned about geopolitical shocks, especially in sectors that involve like sensitive technologies and information. But it seems that biotech is a sector that has a huge potential in China, and also a sector that seems to be somehow benefiting, I may say, from the geopolitical changes. So I don't know whether you have something to share with us. Two things, right? First, how's the biotech sector doing? And second, how can Hong Kong help some of these Chinese biotech companies to go out to reach new markets or to reach new investors?
Thanks, Heiwai. I think there are a couple of things. I think we need to take a step back. I've been involved with this industry for about 20 years and built the healthcare, invested lots of healthcare companies when China really didn't have anything back in the past. I would say when I first started, the largest medical equipment conference, 100% exhibits were black and white ultrasound machines and patient monitoring system. That's it. But when you go to the same conference these days, anything that it's available in US and Europe, it's available in China in the same conference and completely developed and manufactured in China. First half of last year, 50% of the out-licensing deals, new assets licensed by big pharma and biotech companies in the world were from China. 5 years ago, 4%. So it's actually a very interesting time. And in fact, I was just speaking at the WuXi conference at the JP Morgan. I think what's really interesting is it's now the time to help Chinese companies go global. It's also the time to help US companies leverage on China, be it licensing Chinese assets, be it leveraging on Chinese clinical development, because right now, if you look at any new drug asset, the clinical development cost is about $4 billion in US. It takes about 2.5 to 3 years to do a phase 1 clinical versus 1 year in China. If you look at, and of course the NIH and NSF funding dropped. There's also, FDA, about 1/3 of the FDA people got fired. There's also the IRA issue and MFN, Most Favored Nation, and so forth. So all of a sudden, the entrepreneurs in US are looking for investors like ourselves who have access to US and China and really be able to build out the global, global company. And what's really interesting also is just looking at the cost. An MRI test in US costs $3,000 US versus in China, $13. So no matter how you try to reduce the price, and I think US is thinking about, can we use AI to streamline some of the clinical development capability? That's something that's going to be the next frontier that we're all looking at. But in the meantime, China has become quite a force when it comes to developing new drugs for the world. So we're seeing all types of new business models that we have not seen before. And this is definitely a very, very interesting time. Now, one thing I also want to say is that for the last 10 years, a couple of us have been writing to the Hong Kong government proposing the setup of the Hong Kong FDA, where Hong Kong FDA could be equivalent to a US FDA or EMEA to be approving innovative drug in the world or from China to the rest of the world. So, and a case in point is when I was talking to some of the emerging market heads of global pharma, they're saying, why are we, when we are selling to Indonesia and Malaysia, why do we need to wait for a drug to be US FDA approved and then sell it +1 to Indonesia? Because a lot of times when that clinical trial costs 300 to 500 million each, at least, by the time the drug is approved, and one of the examples is that drug approved, and when available in Indonesia, it costed 300,000 US a pop, and it's affordable to about 200 people in Indonesia. Versus there was an equivalent drug from China, and when it was approved, it was 10,000. So all of a sudden, you have a drug that's now available to 200,000 people in Indonesia. So when we talk about equitable healthcare and innovative equitable healthcare, how can we leverage on the world's resources and talents and availability and clinical development to really get to equitable and innovative healthcare for everybody?
Great. So coming back to the theme of the panel, which is about Hong Kong as a launchpad for companies, including biotech companies. You mentioned proposal to the Hong Kong government to set up an FDA. What else do you think Hong Kong can play to support the expansion of Chinese biotech companies, reaching new markets like what you said, Indonesia and other global south countries, or reaching scientists and innovators around the world?
Well, we're about to fund and seed a couple of companies that do, Chinese-based companies or maybe offshore some other countries, and they like to use Hong Kong as the regional or ex-China launchpad to the world. So it's actually very exciting because exactly what Alpha talked about, the legal structure, and then of course the IP. Hong Kong has great regulation or incentives for companies to set up the IP in Hong Kong or offshore and so forth. So this is a relatively, and Hong Kong also has a very good arbitration center. So in case if companies want to set up contracts and whatnot, this is also a good place, and we've increasingly seen companies want to set up based in Hong Kong. So these are some of the examples, but of course, Hong Kong also has great hospitals, KOLs, PIs. I recently introduced Tony Mok to a company that we recently invested in US, who wants to be leveraging on building out global access via and into China and Hong Kong and so forth. So he would potentially be a great PI. And then, of course, Hong Kong has 4, EMPA, so NMPA recognized phase 1 clinical center. That's also a really good place for companies to think about starting and doing phase 1 clinicals here.
Great. So in addition to finance and professional services, we actually have very strong biomedical platform to help both the US and Chinese companies to get into each other's market. Let me turn to Edward. I met you in Washington, D.C., and you were actually the head of ETO in Washington, D.C. around the time when China joined the WTO. There was obviously a very different world, and today we are seeing quite a lot of changes, and I would say abrupt and aggressive policies coming from the other side of the world. So after you left the Hong Kong government, and I noticed that you have been supporting a lot of, I would say, diplomatic activities, right? Obviously informal ones, or maybe I would call it like track 2 diplomacy. Now Hong Kong seems to have this new opportunity again to help Chinese firms to go out because of what Alpha and Nisa just mentioned, our strong institutional foundation, the legal framework and whatnot. What else is missing based on your conversations with your friends in the West? Do we still have that kind of negative narrative that we suffered since COVID? Or things are changing and people see us more like the new potential Asian center for the United Nations? Tell us a little bit about what you...
Thank you, Heiwai. Well, yes, I said the first time we met was when I was leading a delegation to visit DC in my capacity as the Secretary of Commerce. And I remember we had a conversation and partly to talk you into coming back to Hong Kong. Perhaps at that point of time, you might have been thinking about this.
But that's around the time when Dean Tsai called me from Hong Kong, and that's the time when I met him.
Yeah.
And then I told him about your phone call, which lasted for 2 hours, and then he said, well, so why not?
It's a good testimony that, well, smart people come to the smart place. So actually, well, if that example is one that we can share and demonstrate, that means Hong Kong do have the attraction of the brightest talent, the best people, the business coming to Hong Kong. But I think the world has changed. And allow me to be blunt and undiplomatic because I wear no government hats now. I think the world has changed. One fundamental, perhaps two things, stating the obvious. One, the world is still at war. I mentioned this back in 2018 when the trade war started. is still lingering on, is in fact going far wider and deeper into the global trading system. So the war is still on, and we are not yet out of the woods. And secondly, I think in Hong Kong, while we do believe that we are still very much the international city, the free and open trade port, and as you hear from the Director General, we are doing our utmost to demonstrate this. But I think let's face the fact that there is at least one country, one big economy in the world that has taken a different policy towards Hong Kong, even at the expense of violating WTO rules. That's the US. US has taken an exceptionally sort of turn against Hong Kong, partly maybe to do, well, anything to harm Hong Kong to hurt China, or to hurt Hong Kong to harm China, is still in the portfolio. And in fact, it also gone into the origin rules that, well, US does not regard made in Hong Kong a legitimate origin label. So now, these two facts together, meaning that, well, we have to face the world with a degree of alertness that the world is different. And therefore, it's not just going out to preach the positive side, but also to manage the risk associated with it. Now, I think the topic today you mentioned the Silk Road. We can have different names on this road, but I think looking back, while I say the trade war is still on, but apparently the US-China sort of a trade dispute has definitely created very big damage to the bilateral relations as well as the collective damage to the world. But at least figures says that the global trading volume as a result or as an aggregate has not been hammered too much, at least in the last 2 years. The reduction in the US-China trade has more than compensated by the increase in trade in other areas. And it so happened that Hong Kong is still right at the center of the bigger part of the trade picture. So in a way, there's still a very big role that Hong Kong can continue despite the adverse weather. But I think the key to Hong Kong now is, in your original question to me, you mentioned about the superconnectors. I mentioned this in a conference last July that, well, Hong Kong's role is no longer just the connectors, because long gone were the days that we are just a broker charging for professional fee. As you hear from the Director General and the government official, we are doing far more than that. So in my understanding, and perhaps particular coming from the business world, I think the role of Hong Kong is there to perform as a value partner. Partner meaning in Cantonese, 你中有我，我中有你. The best would be Hong Kong would be able to be in the boardroom instead of just a professional broker. Hong Kong should be part of in the making of the Hong Kong story instead of just telling the Hong Kong story. So I believe that's the role that we all want to say. And on the part of government, at least in my previous life, I think we do not just go out to tell the Hong Kong story. We also sort of has a job to do, for instance, in making possible free trade agreements, which at this point of time is in fact the biggest assurance we can get, because it will be bilateral or multilateral, it will be binding with your willing partners. So these are the jobs that, well, we'll continue to do. Although in the present days, well, G2G discussion is very much hammered by the geopolitics and domestic politics. But having said that, I think the B2B or the track 2 dialogue you mentioned still have a very big way to serve in sort of augmenting the limitation between governments. So my view is.
Can I add to that? I'm a current serving government official who is still nevertheless quite direct and occasionally blunt. But I try to be diplomatic at all times. Just quickly, I think you've made very good points. I started off talking about more generic stuff that we've been doing, although it's still very much hard work, because talking about just introductions is not enough. It's how to actually help them land and to manage the risk, because even very large companies could still have problem. Look at Xiaomi having problem getting money out of India, for example. Right? But back to this is, what are the things that we're doing? I mean, yes, the war and the trade war, etc., has not ended. I don't think it will ever end. because there are essentially two superpowers here now at play, and the number one would not want the number two to catch up anytime soon. That happens, but our country thrives on success through stability and cooperation. The other one, don't have to mention it, thrives on chaos and snatching whatever you could get. So long story short is our value of Hong Kong is that despite all that, we are stable. We kept to our free trade status. We want to seize the opportunity based on stability as a groundwork and foundation. You also need to be opportunistic. So I tell my colleagues in Invest Hong Kong, because we do going out, we do coming in. Hong Kong is a platform, right, for Asia, rest of the world, China, rest of the world, etc. So the stability will work closer to rebuild the relationship with more traditional partners damaged by rhetoric, maybe inaccurate in the past few years due to the trade war or other issues, such as our partners in Europe, etc. But at the same time, okay, what are the opportunities? Why is Mr. Trump doing funny things to the traditional partners? Then South America, more trading companies now who trade with China are setting up in Hong Kong, using Hong Kong as a trading hub once again, right? More family offices are coming to Hong Kong because they don't want their money to be snatched up by some random thing going on, right? And so the opportunities are there. The more instability there are, the more stable we are, means there's more of a platform for both going out and coming in. So we also work with Chinese authorities to bring, once again, investments in, including a lot from the US. So we can't share detailed data, but allow me to think the growth is healthy, and historically our highest number of countries in terms of incoming companies other than Chinese mainland are US, UK, Singapore, Japan even. So this is something that we could further build on despite that and seize the, be a guerrilla as well as a proper army at the same time.
These are all great news. I'm going to come back to you, Alva, about the challenges and also the bottlenecks and what you see from your role that Hong Kong can improve on. But I want to hear a private enterprise's voice, from Lalamove specifically, I would say a platform company which may not represent manufacturing in other sectors. But what I have observed is, you guys are doing very well entering new market. And the speed of entering new market is so high. Talk about like 1 or 2 new country open every quarter. So could you share with us, the success story? And I'm going to ask you, give us some failures, what you learned from the failed projects that you couldn't launch.
Thank you, Harry. I guess on the stage, I represent the reality. The company who operate under all the wonderful policies, representing the money from the investors, trying to compete with mainland company going overseas, as well as local company and humble company coming from Hong Kong. We actually started in Hong Kong back in 2013. It's our 12 years. You have seen our driver partners around Hong Kong. And I can tell you that what you have seen in Hong Kong is not the way, not the size we are in our overseas market. Actually, Hong Kong is one of our smallest market. And Hong Kong itself is not a very big market. So once we started, even though I was not with the early teams, it was already the vision that we need to expand beyond the local Hong Kong market. So over the years, we become the market leader in mainland China. We cover more than 300 cities in China. We are covering all the major second-tier, third-tier cities in Southeast Asia. We are in South Asia, Bangladesh, Middle East. Just started last year. We opened up Turkey last year. We are in Brazil, Mexico, all these wonderful countries just been mentioned. And we just launched our first 2 cities, one in Europe and one in North America. So those are so-called the successful side. And Henry always asks, what are the secret of the success? So our sugar, pepper, and salt, if I may summarize them in 3 major elements. One, you got to have a sound business model, something that is not just so tailor-made for one market. You got to be able to replicate it everywhere. Because traditionally, company going overseas, you may sell stuff over to an overseas market. You may manufacture in an overseas market. But the way we're doing it is globally localize our operations. We are repeating ourselves numerous times all around the world in a local basis. So you got to have a business model that is flexible enough that can easily be replicated. And in order to do it like one new market every quarter, you got to have the right tech. We talked about AI in the last panel. We use AI, whether it's smart or not very smart AI, just like electricity. Because without technologies, we can't do it in scale, also in a short period of time. And third one, which I think is the most important one, is talent. Because there are tons of nuance that you need to deal with when you operate around the world on a global basis. And many of the risks we have talked about this morning, we rely on our team in head office as well as in the market to manage. And there are nuances like if you operate in a global basis, 2026 is a very interesting year because middle of February this year, you will have, especially in our case, peak season for all the market with Chinese New Year, which is 2 weeks later than last year. Then you have Valentine's Day. Then you have, in our case, because we are in Brazil, the Carnival happening in mid-Feb. And finally, Ramadan is 2 weeks earlier than last year's. So all our figures, as we compare over the last couple of years, is not apple to apple anymore. And the preparation of peak season, supply, demand, we have to do it all over again. And you got to be able to operate from a global sense as well as being able to localize it. So when it comes to lessons learned, I wouldn't say fail because we don't believe that we fail, but it's just not yet time to success. There are a couple of markets we didn't really stick to the 3 elements I talked about. We didn't hire the right talent to start with, and we got stuck with a team that is not fully following the business model, so we learned our lessons. And in some cases, we didn't really follow our core business model, which we want to serve the local small and medium enterprise. But in some market, we took the shortcut. We went straight to the larger corporate. That didn't do very well. So it takes a bit of time, take the learning, switch back to what has been right for us, and stick to our core business model.
So when you go to a new market, obviously there will be cultural and political challenges. How did you identify the right person to lead that local office? You know, what kind of characteristics, personalities from the leader that you are looking for?
Well, before we open, we always did the basic research, and we have our expansion team who has been doing it numerous times. And also very important that hire the right lawyer, especially lawyer who are good in tax, licensing. Those are things that I think Invest Hong Kong is trying to promote to our friends in mainland China. Hong Kong is very good at that. And the local leader we are always looking for. In the past, we try our best to look for someone who is really local. I think I came to this event a couple of years ago. We were very proud that every one of our market leaders are from that market. But because of the couple of experience that we had, didn't get successful right away, we did have some exemption. For example, we have a Indonesian managing our operations in Bangladesh at the moment, and our leader in Mexico, she is actually coming from Colombia. So we disregard what's the nationality, but we always hire the best who can follow and understand our business model and being able to build his or her own team locally and understand the local needs and be sensitive about it.
Great. Let me come back to Alva, and then I will turn to other panelists with another question. So you have been doing this job for almost 2 years, or slightly longer?
Oh, slightly longer. A month longer than 2 years.
Okay, great. Yeah, I was right. And then you have this new task force sort of coming from, you know, the chief executive, and you are, you know, even not the lead, but you are probably, in my opinion, the major driver of it. So when you get into this new job to be an active player of this task force for firms, Chinese firms going out, what kind of bottlenecks or sort of like shortages in the ecosystem that you think Hong Kong needs to catch up? I mean, we have all the professional service providers, but are they ready to help you know, millions of Chinese firms to go to Brazil and other markets?
I'm very practical. We've always been, for helping Chinese companies going out, we want them to set up something in Hong Kong in terms of financial management, fundraising, or trade management, regional overseas headquarters, etc. So the Chinese mainland to Hong Kong link has always been our bread and butter anyway, because Invest Hong Kong brings in incoming investments, even from Chinese mainland. The new part is the outbound after they come to Hong Kong or when they're ready to be in Hong Kong and ready to go out. We've been doing a little bit anyway because Hong Kong is a hub, and I keep saying to people, if you don't allow people to go out, you will not have people coming in. This is how we work. We work on flow business. We make our buck from flow business. So the second part is how to do it in a more systematic way than what we've been doing in the past, which is like casual introductions, etc. So what we're doing now is I need a bit more help on the outgoing part. I acknowledge that we have our 29 offices outside of Hong Kong and China. We've got 29 offices. They're the TDC offices, but there are also the Hong Kong Government Economic Trade offices. Now, increasingly, we're building our closer collaboration with the investment promotion agency, the Invest Hong Kongs of the destination countries, because they are government, right? They welcome, of course, investment. And they would also know the local landscape quite well, and also the Commerce and Economic Department equivalent. Likewise, our Hong Kong professionals, many of them do have international reach, but there will always be some shortage of areas, where they may not, or tax or otherwise, where they not be as well-versed or as well represented. So some of them, like the Law Society, they've got networks of partners in local markets. But otherwise, what we're also doing is, at the same time, if there's enough flow business with these countries, we go to that country and say, oh, bank, accounting firm, you are getting more China flow business. You don't have a presence in Hong Kong to catch all this. Have you thought about building up something here to get more business? Then I get another project coming in, right? But at the same time, this is what's going on. So I'm relying a lot on, other than my government colleagues and partners, a lot on our professional partners from around the world. So this is what we want to do so that the Chinese companies that go out are helped as much as possible without pitfalls. Like you mentioned, the structure matters. It's not just about opening a company. Is it a JV? Is it an investment? Is it a sales agreement or what? It matters later on down the road. And the talents matter. A balance of who you send to understand the corporate culture, but also locals who understand the market. So all that comes into play, and this is why we do want to work with as wide a platform as possible.
Great. So I remember we had dinner a few weeks ago, and then you mentioned something called sticky business. And that makes me to think of the difference between superconnector and super value adder. What do you think that Hong Kong is missing in order to get the money to be stuck here, or to create more sticky activities so that we don't just connect, but after we connect, we continue to make money out from them?
Yeah, the sticky refers to, I had my background of training in banking. My first job with HSBC, who taught us that sticky business is what keeps your clients here. Like if you help them do an IPO, issue a bond, they may be gone for the next due. But they have the salaries paid, the payments paid, or the trade, or the utility bills in the bank. It's very difficult to move it. Likewise for Hong Kong, we don't just want someone just to come here and say have a sales office or have a financial center, a management center. How do you actually have some kind of investments here that nevertheless benefits the company, such as technology companies, right? We keep telling them Northern Metropolis is an opportunity to build your R&D center. They will say, why do I want an R&D center in Hong Kong when everything is so cheap and fast in Chinese mainland? For the reasons we said, are you ready to go out? Is your eye pre-recognized? And data control in Hong Kong is a little bit more international and free flow than in Chinese mainland. So if you have here, and you also tap into the top talents from the universities and other places, I flipped through your report, the big green book on your table. We are the second largest, highest publisher of AI reports. Like, we have a lot of talents here. So if you do that here, that's the stickiness part. You invest in here, you grow from here. It's not as easy for you to move, but at the same time, it's beneficial for you to be here because Hong Kong is good to you. In the end, why do companies come here or to go out? It's to make money. And remember, Hong Kong government does not charge you a dime unless you make money. We only charge profit tax, right? No tariffs, no nothing. So we want you to succeed. We help you to succeed. Therefore, we get something out of it.
talking about stickiness, I want to ask Nisa a question. It's about IPOs, which obviously you are very familiar with as a former INED for HKEX. We have had a great year for IPO, probably another year this year. So a lot of people who I talk to, with the exception of people who actually help those companies to be listed, didn't seem to think that IPO has generated enough spillovers to the real economy. What is missing, or we shouldn't be too, ambitious about the sort of generated spillovers from IPOs?
Well, I think 9 months ago I asked the retailers when it's going to spill over, and they said 9 months. So now we're starting to see, the Lan Kwai Fong and the likes. It's packed with people, so it's great, restaurants and so forth. But I think what's really interesting is Hong Kong's decoupling with the stock exchange decoupling somewhat with the Nasdaq and NYSE. In fact, I was catching up with the global head of IBD at JPM, and we're starting to see U.S. is because of all the excitement and all the IPOs happening in Hong Kong last year. U.S. is also starting to pick up. First with, I think the last quarter with some of the AI companies and so forth, but Biotech is one that's where Hong Kong was leading last year. In fact, one of the companies that I was very involved from early on in silico medicine, it was it listed end last year, but this is a company, when we talk about Hong Kong, a company that we asked them to move from US to Hong Kong very early on. So this is a co-headquartered Hong Kong company, which became the leading AI drug discovery company in the world. So I think that Hong Kong has so much to offer, but a lot of times maybe the young people would actually have a lot more sense which companies are up and coming, and they will want to join them. So, and I think that there's a lot of really great talents coming in because of the stock price, the stock exchange, the IPOs, a lot of talents moving in from China. And we've seen a lot of financial people moving back from Dubai, Singapore, and US. So all that, it's actually great. It's, in fact, I'm hosting a couple of entrepreneurs, including one of the co-founders of YouTube next week in Hong Kong, talking about how can we start companies here. So I think there's a lot of really exciting, and of course, Hong Kong with the GBA and Shenzhen and the ability to do engineering so quickly, I think we're going to see a lot of very, very exciting startups coming out from Hong Kong in the next 5-10 years.
But allow me to ask a question. Biotech companies listed on the Hong Kong Stock Exchange, does it benefit biotech research?
No. Frankly, no. And that's why I think that it's important to do a Hong Kong FDA. If we have the ability, just like US and EMEA, to approve innovative drug from all over the world, not +1, not +2, but be the first in the world, then all the biotech companies would want to come to Hong Kong. Until then, we're only a piece of land that people can rent out. Sorry, Northern Metropolis. But I think, but I do think that there are things that can draw the talents over, and that's one of them.
Great. Thank you. Edward, we only have 1 minute left, but I will ensure that Paul has something to say in the end as well. So you said we don't have to go out to tell a better Hong Kong story. We just have to participate, more in rebuilding a more resilient and inclusive global economy when there's a government trying to attack it from time to time. So as a former head for trade and commerce, what do you expect Hong Kong to be as a new international trade center? What kind of stuff that we still need to work on?
Yeah, don't get me wrong. I'm not saying that we don't need to tell the story, particularly against the sort of media sort of injustice. But what I said was, we are also, there's a role for particular government and the government plus business sector all together to do is make the story that can be told. Now, the differentiation is, say, when government goes out, in the past, before geopolitics played so negative, there is still a lot of conversation between government, making deals, removing barriers. But against those difficult areas, are we saying that, well, we can do nothing? Certainly not. Now, when you hear Mark Carney's sort of remark in Davos several hours ago, you notice that well, Canada is, in fact, a country reaching out beyond its geography to new partners. Now, when I say Hong Kong needs to be a credible value partner, I'm not just saying that in the business world, but also government, between economies, there could be better room for trade agreements on bilateral basis or multilateral basis. Paul McCon sitting there sort of wearing his period hat would testify that, well, one of our unfinished agenda was to take FTA with Britain when Brexit came to reality. We did one with Australia remarkably well. UK was the next candidate. Canada could be one. So these are the story making that we can build bridges. We can be partners in that sense. Now, stretching a bit, there will be increasingly regional or plurilateral agreement coming into shape, be it Trans-Pacific Trade Pact or RCEP, Regional Comprehensive Economic Partnership. Even Hong Kong not being a member yet, but the KPI shouldn't be seeking a membership, but doing what we can serve these trade blocks. And all the attributes that, well, all the speaker mentioned in the morning, we have the capability of doing that. Now, and also what we bring to the table is not just adding value, be part of it, but also credibility. And now, which is a very important word in business, in intergovernmental relations, and even in geopolitics. But I think Hong Kong has the credential. Hong Kong has the credit, proven not just between government, but by the business world, that we are truly the international center, by rules, rule of law, the system that we operate. So I believe, well, if that's the case, then, well, the joint venture between government, business world, or the presence of the international community here is to build this credible value partnership, using Hong Kong as a base, using the Hong Kong as a hub, and using this multi-layers of spider webs of network beyond each and every profession, and making this is a truly hub. Although there are areas that, well, the Silk Road may not be reached because of the area, but the world is big enough for us to together, I think.
This is very good. It's consistent with what Alpha said, right? You know, we use our institutional strength to provide stability and credibility in an unstable world. Paul, last question, 1 minute for you to answer. You know, at the Hong Kong U Business School, we have been providing a lot of executive education to Chinese entrepreneurs who have been thinking about going out. If one day I invite you to be a guest speaker, you cannot say no. But here, give us a preview about what you're going to teach them in 1 hour. Like, you know, 1 hour lecture, but you have 1 minute to summarize that. And that is, you know, what are the two or three lessons that you want to tell them before they make mistakes in a foreign market?
Well, first of all, do a course in Hong Kong U Business School. Number two, make use of the service of Invest Hong Kong. And number three, tell all your colleagues, friends, competitions, how you achieve the success through Hong Kong so that our story can be told, our story can be lived.
I hope Lalamove will come out to give more, sharing to tell us, why you guys are so successful. I think this is really a true, proud Hong Kong story. Thank you very much. I think you guys have learned a lot. I have nothing to summarize.
Thank you all for